Welcome to Vegan Business Talk with Katrina Fox, author of Vegan Ventures, Start and Grow an Ethical Business. Hello and welcome to episode 133 of Vegan Business Talk. I'm Katrina Fox, journalist, author and PR consultant and founder of Vegan Business Media, a content, events and training platform providing success strategies and resources for vegan business owners and entrepreneurs. Now, just quickly before we jump into the main part of the show, I wanted to let you know about my online PR course and group coaching program, Vegans in the Limelight. Now, this is a 12-month online program where you have video training that teaches you everything you need to know about how to do your own PR. You can ask questions on the platform, and you can also post your proposed pitches and media releases before sending them to journalists to get my feedback. You also get to jump on a monthly live group call where you can ask whatever questions you want about your business, and you can get tailored help from me on anything to do with raising the profile of your brand. So it might be that I look at your website and give you some feedback, or how to improve your LinkedIn profile and other marketing and PR topics. So if you'd like to find out more about that, just hop on over to veganbusinessmedia.com and you'll see a link there for Vegans in the Limelight. And now on to the main part of the show. In this episode, I interview Alicia Robb, a vegan investor in Colorado in the US. With a strong background in economics, Alicia created Next Wave Impact to increase diversity, inclusion and impact in early-stage investing. The company's global fund has 99 female investors, 25 of them women of colour, which is led by an experienced investment committee of 10 women. As well as investing in vegan-led companies, Alicia also recently founded Vegan Investors, an angel investor group focused on helping vegan companies scale to have massive impact. In this interview, Alicia talks about why there are so few female angel investors and what she's doing to change this, why supporting vegan companies that are led by women, people of colour and other diverse backgrounds is important and how she's making this happen, what she looks for in a business before deciding whether to invest, how a vegan business owner can stand out when pitching her, the types of vegan businesses she invests in and why, the key mistakes entrepreneurs make, particularly when it comes to finances or capital raising, and what you should do instead, details of the virtual online pitch meetings she runs, and much more. Here's the interview with Alicia Robb from Next Wave Impact and Vegan Investors. Alicia, thank you so much for joining me today.
Thanks for having me.
No, I love your work, so I'm really excited to dig in and talk to you particularly about your background in investing, and particularly in the entrepreneurial space and in the vegan space, which is fantastic. First question I always like to kick off with, though, is the why. So tell me a bit about why you do what you do. You know, you're working in impact investing and now vegan investing. Why? What are the drivers and the purpose and the reasons behind it?
Yeah, I started doing venture capital and in investing several years ago with a pilot fund when I was still a research fellow with the Kauffman Foundation. And one of the things I came away with from that was just that I wasn't that excited about some of the companies that we invested in, not because they weren't great companies, but and wouldn't give us a great return, but because they didn't necessarily have a big impact on the world. As we know, we have a lot of problems in the world, and I just realized if I was going to continue doing this kind of investing, that I really wanted to focus on investing in companies that were making a positive, significant social change in the world as well. So my focus really became impact investing after that, and that's been the focus for several years now for both my fund with Next Wave Impact as well as with vegan investing as an angel investor, and now with Vegan Investors.
Fantastic. What drew you to economics in the first place? Because I had a look at your background. You've got a very strong background in economics. What kind of drew you to economics and investing in the first place?
When I was in college, I ended up minoring in economics because it was the fastest thing to do with my major, which was international development. But then I realized as I was going through all these classes was how important economics is in everything that we do. So I became a double major and then went on to get a master's and a PhD in economics.
Wow.
And through that really got into international development, which got me into microfinance, which then brought me to small business finance and entrepreneurial finance, which brought me to impact investing.
Wow, a fantastic journey. Now, one of the things I love that you do is that you are wanting to support people, both investors and also entrepreneurs who are from more diverse backgrounds. Let's start off with my question then. Why are there so few female angel investors? Because I know that's something that you're trying to change and you're training women and trying to bring them in. But why are there so few female angel investors?
Yeah, our goal is really to drive diversity, inclusion, and impact in the early stage venture ecosystem because women and people of color are very underrepresented. But, in terms of who's an investor, there's very few people are actually investors and participating in this asset class. But yes, women and people of color are less likely to be investors. Part of that is, I think, just the networks. I actually wrote a book that looked at kind of the gender gap on the investor side and why we don't see more women just not knowing about it, not knowing other angel investors, not seeing deal flow, not knowing how to do it and wanting to know how before they did it. And then also just being risk averse to making one investment into a company that might fail. And so the design around Next Wave Impact and the pilot fund that I did when I was still at Kauffman really was a learning by doing fund that designed a program around all of those barriers to entry to get women into the investment piece by bringing them into a learning by doing fund, giving them mentorship and training and education, and giving them a portfolio of 10 companies with their one investment.
Got it. Why do you think that when you mentioned that some of the barriers, like you mentioned, like the risk averseness, is it that just more women are not exposed to that kind of thing in college, or they're just not naturally as drawn to it? I'm just curious about, obviously there's the barriers, of course, with the networks, but I'm just wondering if there's any other kind of reasons in terms of why women don't go kind of, I want a piece of that.
Well, I think part of it is just exposure and just the networks that they are part of. I think once women learn about the opportunities and the that it's fun and interesting and challenging, that I think they really thrive in the ecosystem. So I think it's more a matter of just awareness and participating in that network.
Yeah, for sure. Also, in terms of female-led companies, as you mentioned, companies led by people of colour and even from other diverse backgrounds, such as sex and or gender diverse groups, those are also compared to, the majority of companies, they're also kind of few and far between. Why do you think that is?
Well, certainly when you look at the venture-backed companies, a tiny fraction of them are women-led or led by people of color. And I think part of that is driven by the lack of diversity on the investor side, which is why we're trying to do that as well as helping entrepreneurs more generally, because we feel like if we get more diversity and inclusion on the investor side, we're going to get more diverse teams funded, which makes more successful entrepreneurs that are diverse, and then they go on to be a new co-founders of new companies, investors, board members, mentors, advisors, etc. So I think part of the reason why, women in general and people of color in general are less representative in the entrepreneurship population compared with the white males. Part of it is a wealth issue, I think, just with lower wealth levels. But I think also part of it is the lack of, venture financing going to these underrepresented groups, which is why we're focused on that.
Yeah, I love it. And I think it's fantastic. I know you mentioned that you're training up and you're bringing in more female investors, people of colour who are investors. I'm curious as well, are you managing, or do you think there's starting to be a change in attitude from the traditional kind of white male investors? Are some of them at least trying to kind of be more open-minded and more progressive and looking to invest in companies that have that diverse people from a diverse background running them?
Definitely. I think there's two things going on here. One, I get a lot of excuses that they just don't see the deal flow. And I can, say we see deal flow every single, day of diverse entrepreneurs that are fundable, that are looking for funding. So it's not a deal flow or a pipeline problem. They really are out there. It's just a network problem and a connection problem. So I think as the ecosystem grows and becomes less siloed and they are exposed to more entrepreneurs that are underrepresented, I think they're going to see the same opportunities that we see in terms of, opportunities to make great investments.
Got it. Well, I love the fact that you're trying to break up the old boys network. It's fantastic. Now, it's a big task, but it's great. So now you yourself, of course, invest in vegan brands. So can you tell us a little bit about what do you look for in a vegan business before deciding whether to invest in it or not?
Sure. Well, I mean, it's a similar, it's a similar process that we go through with, our fund, which isn't specifically focused on vegan companies. But as an angel investor, I invest my own money versus as a venture capitalist, I invest other people's money as well as my money. So I have a different fiduciary responsibility for those investments. As an angel, I have more flexibility to have more passion projects or, take on earlier stage investments that are riskier that the fund might not be willing to do. So as far as, what I look for, it's still, a good company with a product that's, unique, that has a big market, that can scale. And, that's going to, again, with this impact piece, make a significant positive social impact in the world. So, I've been specifically focused on plant-based alternatives, but certainly the cultured meat space, and now there's a new name for it now. I forget what they call it now, but the clean meat, cultured meat.
Oh yeah, clean meat, cultured meat, alternative protein.
Some new word for it, yeah. Right. I haven't really been that active in. I'm more interested in the plant-based alternatives. But anything that disrupts animal agriculture and gets animals out of the supply chain is something that I would look at.
Yeah, for sure. Now, I'm guessing that you probably get pitched quite a lot, maybe even a bit more so because you're now on my list that I've got on the Vegan Business Media website of vegan and vegan-friendly investors. So I'm sure you probably get pitched a lot, and sometimes you might be pitched even similar products. So I'm just kind of curious, when you're looking at that, like what makes a pitch really stand out for you to kind of sit up and pay attention and go, oh yeah, I want to explore this a little bit further rather than kind of hitting the delete button straight away. Like this isn't just, do you see what I mean? Like what kind of really makes a pitch pop for you?
Yeah, so certainly I get a lot of over the transom cold calls in terms of lots of people pitching me, and a lot of it's just not in my investment thesis, so it's easy to to hit the delete button. If it's a vegan business, I always take a look because I'm interested in supporting vegan entrepreneurs and getting more vegan companies scaled. So I usually always take a look. I would say what differentiates folks when they do reach out is if they've actually done their research. Do they know about what we invest in or what I invest in and how it's a fit for them or how they are a fit for me, and why they're interested in me looking at them in terms of the investment opportunities. So I think just I'm a little bit detail oriented along those lines, and so I like to know that they've done their homework and it's not just a complete cold call, like they sent the same email to 60 people. Like if it's been tailored and they're actually connecting to me as an investor and the why behind it, then I'm more likely to take a deeper look.
I love that. And I'm really glad that you've said that, because I know it's tempting, because I get people contacting me saying, I need an investor, I need money now to do this. Where can I go? And of course, now I send them to my nice list that I've done. But that's exactly, you're right, the wrong thing to do, to just kind of pitch the same thing. Give me money, give me money, give me money. And it's interesting because it actually ties in with what I do, which is media, which is why I always teach people, tailor your pitch to the media outlet. Don't just do a big spray and pray. So I really like that you've said that. So take note, people. Tailor your pitch. So now I've interviewed quite a few investors, and I get different takes on this. I'm curious to get yours. How important is a business plan and a pitch deck?
Well, usually the pitch deck is the first thing I look at. And so I think that's important. I spend a lot of time on investor readiness trainings for entrepreneurs and getting them ready for investors. And, there's just things that should be included in that pitch deck. So I actually put a lot of weight into the pitch deck and ensuring those things that we talked about, the product, the uniqueness, how they're better than their competitors, the scalability of it, why they're the team to do it. All of that, it should come out clear in their pitch presentation. As far as the business plan, obviously if you go into due diligence and are investigating the investment opportunity more deeply, you're going to look at the business model, make sure it makes sense, make sure the projections are in line with, reality and so forth. So I think the business plan and having a valid business model are important. But the first thing I see is usually going to be the pitch deck.
Pitch deck. Nice. Okay. And in terms of, because I know sometimes business plan, it can kind of freak some entrepreneurs out because they think, they've got to have 100-page document, with everything outlaid. So in terms of a business plan, like it could even be maybe 2 or 3 pages, as long as would that be fair to say? As long as they kind of research.
The lean startup model, that canvas is a great way to kind of, write out your business plan in a way that kind of touches all of the important aspects.
Got it. Great. Fantastic. Now, as well as providing financial investment, I'm curious, do you offer anything else in terms of, say, mentorship or business advice or having some kind of say in how the business is run, or does it vary from investment to investment?
It definitely varies by investment. I just got a note from an investor looking to invest in a company that I had invested in, but it was a very small investment that I made through a syndicate that I didn't do a ton of due diligence on. I just liked what they did. And if you're going to invest, $1,000 or $10,000 in a company, it's very different than if you're investing, $100,000 or $1 million into a company. And so the level of due diligence I do is quite different based on those, the amount of investment I'm going to do. And so along those same lines, I may or may not be involved in the ongoing, operations of the company and in an advising role. Certainly I'm always available for folks that they have, a specific ask of me, whether it's an intro to somebody or, specific question about, the business or the finances. But those that I'm more heavily invested in, I tend to spend more time on, obviously. And then even if I don't invest, I typically, do help a lot of entrepreneurs get their ducks in a row in terms of being ready for investment and the right kinds of investment and what it means to take outside funding, because it's not for everybody. And it does come with some costs along with the benefits. And so I do think it's good that they know ahead of time what it means to take outside money. That said, when you do take outside money, you are getting not just the financial capital, but the human capital as well, ideally. That's why they call angel and VC smart money and crowdfunding dumb money. But but the level of involvement clearly, varies dramatically across the different investments. Between the various funds and angel investments I'm in, I'm probably well over 100 investments, included not enough hours in the day.
I was going to say.
So I would say I'm very involved in a few, and peripherally involved in several more, but a lot of them are passive investments.
Got it. Understood. Now, so do you predominantly invest in companies that have been around for a while, that have got a bit of a track record, versus, say, a brand new project that's kind of maybe got a concept idea? And if you do the latter, how do you mitigate your risk as an investor?
Yeah, as a fund manager and as an angel investor, I don't think I've ever invested in an idea. I think I've always invested in companies with some traction.
Okay, that's good to know.
Unless you count my restaurant investment up in Fort Collins, I think that was an idea before it happened, but they had a food truck ahead of time, so they had some previous traction with a food truck. But in general, I invest in companies that have some proof of product market fit, even if it's just like a crowdfunding rewards-based crowdfunding campaign where they got a bunch of pre-purchase orders, basically. That would be traction in my
Oh, really? Okay. So they don't necessarily need to have been running for, say, a year or 2 years or 5 years, whatever. Just, okay.
Some traction that shows that you actually are producing something that someone will pay for.
People want, yeah, got it. No, that makes sense. Fantastic. Now let's talk a little bit about the Vegan Investors Group that you've launched. You brought together a group of investors from across the globe, and you're running these online virtual pitch events where entrepreneurs from across the globe as well can come online and pitch, which is a fantastic idea, and they're vegan companies, which is amazing. Why did you, and I actually, as you know, I wrote an article about this on the Vegan Business Media website, and I will put a link to that as well. But tell us a little bit about why did you decide to do this, first of all?
Sure. Well, we had done a couple of one-off investments through bringing some investors together to make investments in specific companies. I wanted to just create a more systematic process to do that. So the one in September was actually our first, virtual pitch event with multiple entrepreneurs. In the past, it's been one specific company that we brought investors together to look at. So this was actually our first kind of virtual quarterly pitch session where we had 5 companies from 4 countries and investors from probably 12 plus countries. So it's a pilot. So, we're learning by doing, just like we're doing, we have a learning by doing fun. I'm certainly learning by doing and trying to make a more efficient process around this. And so we're doing it because I think there's a need. And so, there's a few syndicates and funds and so forth for vegan investing, but a lot of them are later stage and much larger investments. And I know there's a lot of people out there like me who want to make 5, 10, 20K investments in individual companies, but not 100,000, 200,000. And so a lot of times, if you look at what companies are doing when they're raising, they have, say, a minimum of 100K or 50K to be on their cap table and do an investment. And if I had to do 50K or 100K investments, I wouldn't be able to make very many. And so part of what it means to do early stage investing is build a portfolio of 25 plus companies. And so by creating a group where we invest together and put together special purpose vehicles to meet that minimum 50K, 100K, 250K requirement with individual investors investing 5, 10, 20K, it's a way for more early stage, smaller investors to get involved. And it also allows early stage companies to get angel financing and get them to a stage where they're going to have more traction and be able to attract venture capital.
Oh, I love it. That's fantastic. Okay. So is there a cap on so does it just go up to, say, 25K? It's predominantly then for people looking to raise. Yeah, I'm just thinking for the entrepreneur side, if they want to get involved, they shouldn't expect to be getting more than, say, 25K by doing a virtual pitch event. Is that right?
Well, again, just like as a fund, as an angel investor, we syndicate all of our deals. So they may be raising $1 million and we may invest, 200K as a group, but we target people that are raising 100K to $1 million for their, basically their seed rounds. And then individual investors can invest, anywhere from 5K and up.
Okay.
And depending on what the minimum is, sometimes it's, 25K or 10K, they could invest individually and get on their cap table. But one of the things we want to, do is help entrepreneurs. And if entrepreneurs come to VC with, 75, 10K investors on the cap table, that those VCs might just walk away and I can't deal with that. And so by aggregating smaller investors into one's vehicle, it's one line on the cap table and it's a cleaner cap table, and that benefits the entrepreneurs as well.
Brilliant. I love that. Thank you for explaining that. So how do you choose who to allow on the virtual pitch events? I know you've only just really kind of kicked off, but I'm just curious because I imagine you're probably going to get, just as you get pitched a lot individually, I'm imagining people are going to get very excited about this and you're going to have a lot of applications. So I'm just curious, what are you looking for in the applications and how best can somebody represent themselves to get it? I suppose it's a bit like applying for Shark Tank, and I know it's not the same as Shark Tank. They don't get the deal on the call or anything, but I suppose, just kind of what are you looking for to actually go, we're going to put you on this particular event?
Yeah, we had way too many companies that wanted to pitch in our launch event in September. And so we narrowed it down to people that had some traction, that had a, scalable potential, that potential for scale, and just, interesting, diverse group of, companies and entrepreneurs. So it was really just putting together, just a group that would be attractive to a lot of different investors as the first, as for our first virtual pitch event with multiple entrepreneurs. I think what we learned, we weren't planning on having 5, but we just had so many good ones. It was hard to pare it down. I think going forward, we are going to move to monthly events and have 2 companies, just like our fund does. We look at 2 company presentations a month. Okay. But we're just going to be we're starting to do quarterly events. And just because it was so many companies, we were going to have a pitch event in November, but we're still trying to do all the due diligences and all of that on the companies that pitched. So we're going to wait till January to see new companies, but it'll probably be every other month, 2 companies a month, or two companies every other month. And yes, we already have a lot of applications. So showing product market fit, showing the scalability aspect, showing a decent pitch deck that shows that you understand where your company's going, who your competition is, why you're the team to really solve this issue, and show that it's a good investment opportunity. I think those are the ways to really differentiate yourselves. We're already looking at only vegan companies led by vegan founders, and so that knocks a ton of companies out. Right. But surprisingly, there's lots left, and we're excited about that. Because even within that narrow focus, we are seeing lots of great investment opportunities. So it's clearly a need that hasn't been met yet. So we're excited to try and help solve the issue.
Yeah, fantastic. No, I love it. Now, I know it says on the Vegan Investors Group website that you're only, like you've mentioned, like you've talked about, you're only really looking for companies that are going to have this really big impact. And I think you even mentioned you're not necessarily interested in restaurants as an example. I think it put on there. But what about then for maybe smaller vegan business owners who maybe don't want to necessarily have massive companies and not the rest of it, but so they're kind of still fairly small, but they can still have a kind of an impact, whether it's locally or if their products are available, say nationally, but they're not looking to kind of scale up and be massive companies. What advice could you give to them about if they were looking for some investment, or even if they shouldn't look for investment and should look for other ways to raise capital?
We tend to tell people not to look for angel or VC funding. If you look at the percentage of companies, it's only about 5 or 6% that actually get angel or VC financing. So 90+% of companies never get these kinds of funds. And so I think it's important to realize that, you have to fit a very, we are trying to break down the venture capital model and find alternative structures and so forth that actually are better fits for the entrepreneurs and the investors. So it's a win-win. But that's a whole nother conversation. But I think for companies that are smaller, that are like the Main Street type of businesses, restaurants, stores, et cetera, that aren't looking to have a global footprint or even scale beyond their local communities, there's lots of financing options like community development, financial institutions, credit unions, et cetera, from their local communities that have a vested mission to invest in their local communities. So it's hard for startups because banks don't necessarily want to fund startups if they don't have a track record and you don't have a house to put your equity on the line for the collateral. But I think once you have some operational history and a good business model that can show that you can be profitable, then there's lots of lending opportunities from various financial institutions. There's also, honestly, there's also this, rewards-based crowdfunding. So you see a lot of Kickstarter, Indiegogo, and other campaigns that are rewards-based. So you can have pre-purchase basically from future customers help fund the startups. And more with the Jobs Act and crowdfunding, there's a lot of debt-based crowdfunding platforms and equity crowdfunding platforms that are also potential options for folks as well.
Yeah, I'm glad you've mentioned that, because I think it is. I think, and particularly, it's probably the education around it. I think people see, oh, good, there's all these vegan investors. I need money to do this. I'll go to a vegan investor. So I think it's actually helpful for particularly for smaller businesses to kind of go, oh, okay, that's not the best route for me to go down. So I'm glad that you've said that. And you're right on the crowdfunding. I did a Q&A actually with a hugely successful recent one. It's a French a bag. It's like, it turns into, it's called the Bobo bag. I don't know if you've seen it online. It's like a backpack, a shoulder bag, and a handbag. And it's a Parisian father who's been in business for a long, long time. And now his daughter is vegan and into the whole eco thing. So he's been using leather for years and years. And now they've got this new brand together and it's all vegan. And they put a Kickstarter out. They wanted to raise about $15,000 US, and they were close to $1 million in pre-sales, because like people really wanted it. So yeah, you're right. There's all these other ways to do it. So it's not always about investment.
Fantastic. And honestly, if that is also a great route to venture capital, if that's what the entrepreneur wants, because if someone sees that you have $1 million pre-order, reward-based crowdfunding, that's a huge signal that the market is there and ready and willing to pay, and that there's growth potential. So it's not only great non-dilutive funding, but it's also a great signal to other investors down the road if you want to take that kind of investment.
Absolutely. So just to wrap up, I've got just a couple of final questions for you around vegan capitalism. And I should say I'm giving a talk on this, so I'm gathering people's views on it. And of course, I'll attribute, what you think. So I'm just kind of curious, because it kind of comes up, particularly because in the vegan business world, of course, we're also activists in that, we want to make a change, for animals, people and planet. But some in the vegan and the animal rights and the social justice movements are saying that, all this kind of, what they're kind of calling, vegan capitalism and consumerism, they're quite skeptical of the finance and business world in general, and they're saying it's not the solution, to a just and fair world. And of course, then we've also got these companies, multinational companies not known for their ethics, jumping on the vegan bandwagon. So I'm just curious, what are your thoughts on this topic?
My thoughts are changing over time, because I definitely see both sides, right? Yeah. I mean, when you get someone coming in and either buying a vegan company or investing in a vegan company that is not vegan, it brings a lot of human capital and knowledge to that entrepreneur that will really help that company scale. They have distribution channels that most small vegan companies could only dream of, and so there's a lot of upside to getting either bought by or invested by one of those players. I think just more recently, I'm leaning towards the side of, being a little down on that and really wanting to see the growth and wealth creation coming from the vegan businesses going to the vegan community and those that are aligned with these values, because I don't want to necessarily see these huge meat companies profiting and investing in and then profiting from these companies, and they don't share our values. I would rather see that wealth stay within our community so we can continue to do good things and more things with that wealth that has been created. So I definitely am more on the side of let's just do it ourselves and build that wealth together and create a more compassionate world.
Yeah, no, I love it. I'm same with you. I can literally see there's both sides. And I recently had a chance, I spoke to the head of one of the major fast food chains in Australia. He's invested, the company's invested in a plant-based protein. So I went to the launch, because I went up to him and I said, look, are you prepared to actually, now that you've added these this plant that they've just added finally, like a plant-based burger, I said, are you willing to take some animal products off the menu instead of just adding the plant-based ones on? And he was really candid and honest. And he said, oh no, he said, not yet. He said, we're not brave enough to do that yet. He said, we're not on a mission. This is about business. It's about profits. We want to add customers in. And I think that's where the issue is coming. It's like, because my optimistic view is that if we can make ethics
profitable, that would be a good thing. Like if they look at it and go, oh, okay, people are buying the plant-based product, they're not buying our animal-based ones. Let's ditch the animal-based ones like Elmhurst, the dairy company, did. That's what I would like to see. But I know sometimes people go, oh, that's too idealistic, whatever. But it's interesting times. So I'm very interested to get your take on that. So yeah, thank you for sharing that. So just finally to wrap up then, what's next for you? Is there anything you want to share with us, anything that you're doing, and just your long-term vision for you and your various ventures?
Well, let's see. So Next Wave, we're doing a new fund that's going to be focused on both racial and gender equity as well as a sustainable planet. So I would like to continue to see vegan, sustainable companies in our portfolio through Next Wave. And then, as we're building out vegan investors and figuring out the processes that can work best for both the investors and the entrepreneurs, the more the merrier. So we'd love for folks to come on board through veganinvestors.com. I think, we just want to create a more vegan and compassionate world. So,
Wonderful. Well, I love it. I'm just so happy that there's so many people like yourself, who are coming from that finance world, that economics world, that are, just really literally making a difference. I think it's just, it's unprecedented times and it's very exciting. So thank you for everything you do. And also thank you so much for speaking with me today. You shared some great tips, which I know will be helpful to my audience of vegan business owners. So it's been an absolute pleasure speaking with you, Alicia. Thank you.
Thank you for having me. It's been a pleasure.
So that was Alicia Robb from Next Wave Impact and Vegan Investors. You can find out more at nextwaveimpact.com and veganinvestors.com. And those links are on the show notes page at veganbusinessmedia.com/podcasts and going to episode 133. Now for some vegan business news highlights. Activewear brand KD New York has created a vegan alternative to cashmere. The company, which was created by two dancers from the Oakland Ballet in 1980, makes a range of athleisure products, from bodysuits to leg warmers, which have been worn by celebrities including Jennifer Lopez, Beyoncé, and Mikhail Baryshnikov. The founders launched a Kickstarter campaign to raise $51,000 to launch the vegetable cashmere line and surpassed that with 243 backers who pledged just over $54,000 in pre-orders, which are expected to be delivered in February 2020. KD New York founders say that the product is exactly like animal-based cashmere in terms of look and feel, but without the cruelty. It's also more sustainable, being 100% plant-based, natural, and biodegradable. I love this. I'm so happy to see the dance industry start to embrace vegan alternatives. My wife Tracy dances on pointe and she gets her vegan pointe shoes from Gaynor Minden. They've got a vegan range. And the lovely Cynthia King, who's a passionate animal advocate, who runs a dance school in Brooklyn, New York, has her own range of vegan ballet slippers. So this development by KD New York is excellent, especially because it raises awareness of the cruelty to goats in standard cashmere. Fantastic. Swedish plant-based milk brand Oatly has launched a big, bold advert in Waterloo train station in London in the UK. The ad is a huge horizontal billboard with the words, "Go ahead, eat vegan." Now, in 2015, the brand, which makes oat milk products, was sued by the dairy industry in Sweden and lost for its "It's Like Milk, but for Humans" ad campaign, which it launched in the UK in late 2018. My heart leapt when I saw a picture of the Go Ahead Eat Vegan billboard in one of London's busiest train stations. What I particularly love about Oatly is they're not afraid to use the word vegan. Many companies are jumping on the plant-based term, and that may well be the right decision for them and possibly for you. But Oatly, along with Miyoko's, is thoroughly embracing the vegan word and message. Now, there's a lot of discussion about terminology and whether vegan businesses should use vegan or plant-based in their marketing and branding. I wrote about this for Forbes when I had my column, and the article is republished on the Vegan Business Media website, and I'll put a link to it on the show notes page for this episode. So that's it for this episode of Vegan Business Talk. Thank you so much for tuning in. If you enjoyed the show, I'd really appreciate it if you gave it a review and rating on iTunes or any other platform you're listening on. Finally, I encourage you to head over to veganbusinessmedia.com, where you can find more free resources as well as details of how we can work together to help you grow your vegan business. I'm Katrina Fox, author of Vegan Ventures, Start and Grow an Ethical Business, and I look forward to catching up with you in the next episode of Vegan Business Talk. Bye for now.